Hello again, everyone, and welcome to the latest in our series of Talking Sport webinars, a weekly webinar created by 11 Sports in partnership with World Football Summit. My name is David Garrido. I'm the regular main event host for World Football Summit. Every Thursday, we bring together leading figures from across the industry to share their insights and expertise on the fight back from COVID-19. And today, we're looking at the sports investment landscape, hearing from a group of leading investors to understand how they're approaching this challenging time, but also what opportunities they see for the future. Now, the landscape looks very different to even just 6 months ago. There is no way of overstating the seismic financial damage done by the global coronavirus pandemic as fixtures and competitions worldwide were postponed or even cancelled altogether. For some clubs and individuals, it had even deeper consequences. Jobs and livelihoods were at real risk, and so on and so forth up the chain. Broadcasters don't get the games they paid for. Advertisers don't get the exposure they hope for. Rights holders don't get that TV revenue because either payments are withheld or they have to be reimbursed. And above all that, the fans suffer the loss of one of the things in life they value the most. But a different landscape doesn't mean a desolate one. Crisis creates opportunity for those smart enough to spot it. Will the value of live TV rights packages be hit? So broadcasters want to maximize that, but rights holders might want to redesign and remodel. Will companies like Amazon double down or shy away? Are governing body OTT platforms still viable options? Will certain sports become more attractive for investment, such as esports has now hit the mainstream with increased visibility, or women's sport? We discussed this last week. It had undoubtedly picked up momentum before the pandemic hit, but is really facing serious challenges right now. How is content affected? Does the world around the sporting event become more attractive than the 90 minutes or 2 innings or 4 rounds or 5 sets? Well, YouTube analytics would say that's where their audience is at. What about the athlete themselves, the ecosystem around them? Perhaps that's the most valuable asset out there. Will that attract the budgets? Will influencers be more in demand to capture those eyeballs? Or is that a phase which has passed? There is plenty to discuss in the company of this esteemed panel, and you're about to see them on screen right now. Michael Spirito, Managing Director of Sapphire Ventures, Massimo Marinelli, CEO of Aser Ventures, Guido, President of the San Francisco 49ers and Chairman of Elevate Sports Ventures, Colin Neville, Partner at the Raine Group, and guiding the conversation for us as moderator is Chad Biagini, President at Nolan Partners. Welcome one and all. We understand this is a packed webinar with 6 of us on it, so hopefully the tech will cope. We'll hear your insights over the next hour or so. To those who are watching here on Livestorm, plenty of ways to get involved in our session on the right of your screen. Primarily, submit your questions via the questions tab. We'll try to include them, and we'll also ask you your opinion throughout with our polls. The first poll is live right now, and it asks this. Many economists predict a recession due to COVID-19, albeit they disagree on the scope, the length, and the scale. Once the pandemic is under control, will the new economic environment have an impact on spending in sports? You have 4 options there to pick from. Get involved, cast your vote. We will update you on the result of that and the ones that follow a little bit later on. I'm delighted to see that Chad has reanimated there from the darkness. We can see you now, Chad. The virtual floor is yours.
Thank you, David. Thanks for the warm introduction, and we're certainly excited to be with all of you, 11 Sports, World Football Summit as well. Thank you. So I'd like to kick off by having all of you do brief 30-second introductions before the Academy Awards music comes into play here for each of you. But many of your organizations are the engines behind brands that we might be familiar with, but we may be less familiar with some of your organization's brand names and what you do. So Colin, would you mind going first? Brief introduction. What is Raine?
Sure. Thanks, Chad. Colin Neville, I'm a partner at the Raine Group. Raine is a global merchant bank focused exclusively on tech, media, and telecom sectors. Within those sectors, we double down on areas we think are growing most aggressively. So sports, digital media, content, gaming, live events, although live events less so these days. We have 2 businesses. One is a strategic advisory business where we do M&A, capital raising, advice for companies large and small. And then we have an investing business where we manage over $4 billion, primarily through a growth equity strategy where we back founders and management teams that we're excited about.
Wonderful. Thank you. Massimo, pass to you for Aser.
Thank you, Chad. And very nice to be on this stage with you all. Aser is an investment platform focused on sports and entertainment. We are effectively the investment company of a successful sports media executive and entrepreneur, Andrea Radrizzani, that built and sold businesses before. We obviously always looking to extend our reach, and in fact, I'm very pleased to see, well, certainly one of our partners on this panel with our Guido at the 49ers, given that one of our main assets is Leeds United, and they are in that investment. One of our other major investments is 11 Sports, a sports distribution platform, amongst others. We typically combine the, I would say, investment with deep market and the capabilities in the team, represented by the real operating executives in the business, not myself. I'm basically responsible for the investment strategy.
Massimo, thank you. Al, I'll pass to you. The 49ers probably need no introduction, but tell us about Elevate.
Well, I appreciate that, Chad. Yeah. Well, my background, obviously 5-time Super Bowl champion, San Francisco 49ers, and then Elevate Sports Ventures, global sports and marketing agency, really focused in on properties, sponsorship, suite sales, premium, ticketing, and our insights business. We do quite a bit in the valuation space on behalf of teams as they look to develop a new stadium or new arena around the globe. And happy to be partnered with Massimo on Leeds. Hopefully we can get back to going and get promoted here shortly.
Thanks, Alan. Michael, if you don't mind being the bookend for us.
Absolutely, and thanks to 11 Sports and also World Football Summit for having me. And it'd be nice to have David commentate my life based on some of those productions that we had going on. That'd be pretty fun at this point in time. Sapphire Ventures, a multi-billion-dollar venture capital platform in Silicon Valley. Sapphire Sport is the early stage platform at Sapphire. Really, we think about the connected consumer using sport, media, and entertainment as the backdrop for that. We're differentiated in as much as our LP base is concerned. We have LPs that span all of global sport, media, and entertainment, from team ownership groups, Al and the San Francisco 49ers, of course, being one of those, to leagues, to events, to athletes, to media rights holders, et cetera. So using sport, media, and entertainment as the backdrop, we are technology investors in how the consumer is moving.
Thank you, Michael. So questions for the group. Many industries, most industries have been affected quite a bit by this pandemic. And I'd say sports, tourism, entertainment have probably been hit disproportionately hard. You look at jobs, ticket sales. If you're in ticket sales, probably not much to do these days. In your worlds, I imagine you're busier than ever. What's the role of an investor through and post-COVID?
First and foremost, for those of us with portfolios, it's making sure that our companies have the tools and information and everything that they need to move forward. So making sure that the balance sheets are strong to get through this crisis, making sure that they're focused on whatever part of the organization needs to be focused on in this time, like product development. In a lot of ways, seen companies actually take this opportunity to develop a product where they cannot otherwise because a certain sales channel might have been turned off. And most importantly is making sure that they're working with the customer in new and innovative ways, because we've seen nothing else. The role of technology as we get through this crisis will also accelerate the other side of it. Technology is more now than ever. Brand, be it a team, be it a league, be it a confederation, be it a media rights.
Yeah, go ahead, Colin.
I would just echo Michael's comments. We spent the first 3 weeks of the crisis getting our hands and wrapping our heads around the portfolio, over 30 companies at this point. So we did a pretty extensive risk assessment, and we were in regular dialogue with our CEOs and management teams. Fortunately, we've bet on some sectors that were more digitally focused. So we've had some pretty good success stories actually, and a couple companies that have accelerated. Of course, the ones that are more exposed to live events, we're figuring out liquidity positions and making sure, as Michael alluded to, balance sheets are strong. But now we've turned the corner and we're looking for opportunities. And on the advisory side of our business, the number of inbounds from leagues and teams and companies looking for capital is probably one of the highest points in my career. So Luckily, we stabilized the house for now, at least. No one really knows the future, and really turning towards ways that we can find exciting opportunities and help the next set of businesses grow.
Yeah, I'd echo what those guys said. I mean, it's fascinating when you think about this. I mean, we've really only been in this for a little over 3 months. It might feel like 10 years to everyone, but I sort of, when I serve two purposes, right? Operating a NFL football franchise and obviously being a chairman of a global sports enterprise, I have my finger on the pulse in the sense of we represent about 40 properties at Elevate Sports Ventures. We operate in 14 states in the US and 3 countries. And Chad, you know this because I've been on calls with you, like whatever's happening in the Bundesliga or La Liga or the NFL or MLB, I'm really on every single one of those calls around getting these leagues back to play. And I would say, just like these guys, your first inclination is to check in and make sure that obviously people have the bandwidth, or it's companies we've invested in, they have the liquidity needs that they, to get through all of this. Then the next question turns to, look, I call it the infinite game. 2020 is going to be tough. There's no doubt about it. But the question becomes is, how are we prepared to come out of this? And all of us went through contingency planning. We're probably at that point where we've done 20 different contingency plans. Quite frankly, at Elevate and really at the 49ers a little bit focused on 20 because we're going to play a season. But at Elevate, solely focused in on 21 and what, global sports looks like coming out of this pandemic.
Thank you. What would all of you say to CEOs right now who are trying to decide between protecting all cash that they have on hand to actually taking investment and investing into the future of their organizations or a rebound?
It's a little bit of both, right? And as we all alluded to, making sure that companies have strong balance sheets, not only to get through this, but to be in position to accelerate out of it is of utmost importance. So for a lot of our portfolio companies, as Colin mentioned, we're seeing as much deal flow as we've ever seen. So a lot of the companies that are currently pitching, look at 8+ month runway. It's a pretty critical number, at least in the venture capital. With early stage investors, we're kind of in the seed, even some C investment stage. We like to see month runway. As you think about how that cash is invested, it really depends on where these companies are playing ecosystem. By and large, if you are a technology provider to media rights holders, teams, leagues, etc., there is going to be opportunity to be a part of how this industry looks, how this industry is redefined on the other side of it. So if you are conserving cash too much, you're not investing in your product, you're not investing in your recruitment, you're not investing in your business development channel cycles, then you're not going to be positioned to accelerate the other side of it. So it's a little bit of both. Each company, each industry is going to look a little bit differently. It was probably conservation a little bit more on the other side of it, which may be continuing right now, with acceleration and increased investment potentially starting this fall or even with 2021.
Yeah, if I can add to that, I think ultimately there is always going to be differences from company to company. But I mean, my message would be not to take the eyes off the ice, right? I mean, at the end of the day, if you look in sports, there is going to be some companies that ultimately they got very strong assets with longevity ahead of them, and obviously value, and that's why in the short term you got to be sure you got the liquidity and the strong balance sheet to be able to see through the lack of revenues you might have in the medium and short term. And although you might have some uncertainty over the next few months, people back in the stadium or things like that, ultimately I think we all know that in 100 years time people will still want to go and watch a 49ers game or whatever other successful sport franchise. So ultimately it's to maintain the credibility and visibility into what you're building, and make sure that there is a strategy that can execute and focus on execution. I think we also see a lot of acceleration of some new trends with this pandemic. To be fair, I think sports has been one that I know. I think you covered or has been covered in this setting. last week. So there will certainly be some new things that I think also Con was referring to that will accelerate with this with current environment.
Yeah, I'd say in our portfolio, there's no one blanket piece of advice that we give. It's very tailored to the situation. You know, we on one end of the spectrum, one of our investments, DraftKings, went public during coronavirus. I think it was the first company to have a virtual bell ringing in April. On the other end of the spectrum, we have companies that are in the live events, concert space, and it's all about cash preservation and survival. So it's really got to tailor your advice and guidance based on the situation.
Yeah, said very well. I mean, for us, I view us like a custom development shop. I mean, every conversation is very, very different depending upon investment owner. I have companies inside of Elevate Sports Ventures or properties or teams that are right in the midst of having their seasons canceled or postponed. I have others that are embarking on building stadiums. We have 3 MLS properties that will open in 2022 or 2023. Those haven't been impacted at all. Frankly, there's a ton of opportunity as you think through the growth and scale of those businesses. So I think to everybody's point that we just made, it's really a property by property or company by company strategy.
Thanks, everyone. And yes, when you look at the word investment, not all investments cost money per se, right? It's a time where you can invest into your people, you can develop them. We see lots of organizations cross-training their employees to make sure that they understand how the rest of the business works so that they can rebound with better strengths than before. I'm going to go to a poll that we asked the audience beforehand, and I'll bring it to all of you. So many economists predict some sort of recession. They're disagreeing maybe on the scale and the scope of it. But once we get this pandemic under control, will the new economic impact, our environment impact spending in sports? The split decisions. So we're almost a quarter all the way across from no, people and businesses crave sports. The next answer, consumption's high, but more people will be viewing it at home. The next, consumer spending will remain high, but corporate spending might diminish. And the final answer is sports will be significantly impacted for years and truly almost 25% in each of those answers. So I'm going to float it across to all of you. What's your expectation once the virus is under control? What do you see as the impact on the sports economy, so to speak?
Well, if we're talking about recession, then you have to look at it in two ways. First of all, corporate versus consumer, and secondly, for what period of time. So with recession, corporate spending and corporate sponsorship will, in the short term, most likely be impacted. We saw that in 2008, 2009, and probably that to some extent, short-term sports impact. Depending on a lot of things and a lot of macros that we see, including and other things. But on the consumer side, there's never been more pent-up demand for entertainment. No further than the ratings that the Bundesliga has been getting over the past 3 weeks. Looked at further than how many people tuned in to watch Tom be really bad at golf 2 weekends ago. Not much to watch, and so much pent-up demand that people are frothing at the mouth to consume sports. Now that consumption is probably going to look different for some period of time. And at the end of this, and when we do come out of it, ideally it will look different going forward in a better way. We'll have better products, we'll have more engagement, we'll have more interactivity. We will have more of a connection between team, athlete, league, brand, and the end consumer. And you can, think about that as it's how we as an industry are strengthening ourselves for long-term viability. So when you look at the consumer, it's about what percentage of the what wallet there is going into entertainment. I don't think that's going to change much. As a matter of fact, that might increase coming out of this because of the pent-up.
Yeah, Chad. If I Michael says, what I would add perhaps is that ultimately, when we look at sports, and the reason why we like sports is that it is an underutilized and underdeveloped asset class. And so, obviously, it'd be irrational to say there has been a short-term impact, right? I mean, at least in some part of sports, obviously, Colin has indicated some other where there haven't been, or entertainment more broadly, like, gaming and things like that. But, we obviously, with our assets, if you think of Leeds United not being able to host home games, obviously, it's very clear that you're going to have an impact on revenue. So those short-term impacts will be there. But because of the opportunities that are in the sector, we remain very confident this is absolutely a good space to be. And in fact, this creates opportunities. But obviously, to be mindful of what would be the broader economic impact and the ability of consumers to spend in the current environment. So, of course, it's not something to be forgotten, but we remain positive about the sector.
I'm going to go to the questions that are coming through on the screen. So Adrian Bevington, thank you. He's asking, as the spike of COVID reduces and we enter into some level of normality, will we begin to see an increase in acquisitions of clubs and leagues that may be in financial distress across Europe, and particularly those in the UK? And then his subsequent question, is this a major opportunity for equity groups with large capital to invest? So I'll throw that to the group.
Yeah, I'll take that first, just because we're working on several situations in Europe across the football landscape in particular. I think, as is always the case in European football, they're the haves and the have-nots. Certain groups that have incredible balance sheet and firepower based on their ownership, and certain groups that are less well capitalized. It's pretty ugly, to be honest, across some of these leagues in terms of the liquidity situation right now. I think, thankfully, a lot of the broadcasters have been working with the leagues to make those payments. But yes, this will be a buyer's market without a doubt, especially on the football side. Especially player transfer revenue, and a lot of these streams that clubs relied on won't be there for the near term. So, I think this is a great buying opportunity. I still believe, as Massimo said, in the long-term potential of these clubs, and you have to think of them as long-term potential. But as always, when you go through situations like we are in right now, the strong typically get stronger. So, I think it's a great opportunity to be out there.
I completely agree with Colin. I think there's opportunities for buyers out there right now. And I agree. Getting back to it, because it dovetails into the question that you just asked prior to this, Chad, or the poll. Like, I'm a buyer of sport. When is our content has never been more needed than it is now. If you love sports, think about your day and your life as it stands today. Any sport that they put on is getting record ratings, even if it's literally anybody that watched the Last Dance in the U.S. with Michael Jordan or across the world, the engagement levels for that. If you look at it, 72% of brands still want to extend sports sponsorships. If you look at all these content companies, if they didn't have sports, what would they be? So for me, I'm probably more bullish. I worked for the Dallas Cowboys from 2007 to 2009. Was probably the worst time, arguably in the world. And we broke a ton of revenue records. We did $600 million in seat licenses, and the next highest, or the previous highest, was $150 million. $20 billion got spent from, call it, 2008 to 2014 or 15 when you look at new stadia across the country. And so infrastructure went on a boom. Look, does that happen right away? Probably not. But I think Colin's right. If you have dry powder and you love sports, there will be opportunities out there for people. And I just believe that fans will come back. And I think every single poll, if you took it from day one, do you take it to now? If you ask me today, would Levi Stadium be full with 70,000 people in September if it was voluntary, if the county and the city let us? I think the answer is probably yes. Now we have a lot to learn, but I truly believe that fans will come back.
That's great. Follow up to, go ahead, Mark.
I'm sorry, go on.
I was going to say, kind of follow up to that last question. We've seen varying degrees of success from investment groups and sports acquisitions, some who took organizations and made them immensely better, and others less so. So if you are advising a new owner who's closed on a property, what's the first 1 or 2 things they need to do to make sure they're successful after they've acquired a league or a property?
I'm happy to go that. I mean, I think ultimately, the focus has to be on execution. I mean, it's probably not any different than it is in other investments, in other sectors, to be fair. Obviously, typically when you do an investment, you want to focus on what the opportunity is and what's the team that is going to be working on that opportunity, and identify, whether it's the right team or whether there needs some changes into that team. But ultimately, you need to make sure you can execute your strategy. Obviously, strategy can change. What you go into investments with is not necessarily what you're going to end up, coming out with it. There are obviously a lot of successful business sports. I'm not just thinking about teams here, but particularly in the sports tech, perhaps arena that need to pivot in their lifetime. But it's important that you got the right execution in mind, and you focus on it to make sure you're gonna end up where it's the right place to be. So I don't think actually it's probably different than it is for other sectors, but perhaps some of the colleagues here might want to add.
Whether you're a technology investor or you're investing in team or league assets, you're going to be successful if you think about investment as a long-term investment, right? And if you're focused principally on 2 things: what your product is, and making sure that you're investing in that product, and not just at the outset when you first purchase over the long course of time, and then ultimately focus on your fan or and customer, and you're probably going to be in a better position to be long-term successful if you think about that investment over the long period of time. If you're looking to flip an asset, if you're looking to get in because simply of the league economics or the fact that there's buying right now, then you're probably not going to be best positioned to be long-term successful.
Yeah, I would just add, when we make investments, we spend 6 months plus typically with our management teams and owners before we make an investment. So it's a little bit late if you're trying to figure that out once you've made the investment. Usually that's when things go wrong. That's from our perspective, at least.
We have another popular question that's come into the group. So Claire, thanks for asking this one. Will women's sports suffer as a result of the COVID-19 fallout, or do you think investors may actually see this unexpected pause as an opportunity in the space?
I'm seeing more focus on women's athletics than ever. Look at the Athletes Unlimited platform that's recently been launched by a friend of ours, John Patrikoff. I've seen 3 business plans in the last 2 weeks for women-focused digital media platform. So, from an activity perspective, I think never seen more activity around it. And as we move from a consumption culture perspective to a more one-on-one and personalized and technology-driven consumption pattern, that opens up more and more channels through which connect via whatever the content paradigm is. So that I think really serves help as these initiatives and as these products and projects come on.
Yeah, listen, I'm with Michael. I would start with I hope and pray not. As a father of 3 girls, I'll tell you, I am very passionate about women's sports. I'm actually, right after this, I'm going to take my daughters to have a basketball lesson later on today. They're in their soccer clubs and competitive leagues. So I'm with Michael. I think, as content shifts and it's easier to get it in the hands of people who desire it, there are tremendous athletes on the pitch, field, court, ice, whatever you want to call it. And, we are definitely seeing some opportunities in that space, primarily really here in the US, but Chad, I certainly hope so, because I think it's well-deserved and earned. And folks like ourselves, I think it's key that we're invested in it, not just from cash and dollars, but from an operational perspective, to grow those leagues and teams.
Yeah, I mean, I can definitely second that. I mean, we actually are definitely looking at that space as an area of more investment with our portfolio companies. So we think, ultimately, it's as I think about what I was saying before, sports is an underutilized, underdeveloped asset class, and this is obviously, as was indicated by this question, another great example where there is opportunity for sure.
Yeah, I would agree as well. We recently worked with the NWSL owners to recruit their new commissioner, and we had an overwhelmingly positive response of strong, capable global executives who were interested in that role. So I think that women's sports continues to climb the ladder. And I'm with you, Al. I've got 2 girls myself. It's a very important area that we all need to continue championing and being behind. How would you recommend sports organizations look at innovating during this time of nobody in stadiums? I mean, is now the time to test and try new things that you might not have tried in a previous environment? Colin, I'll throw it to you.
Yeah, the one example that comes to mind, we were the first investors in the PLL, which is the Cross League here in the United States, and I know Al's been helpful and involved there. Paul and Mike Rabel, the 2 co-founders and brothers, I think we're first to market in creating this quarantine tournament that they just announced this morning they're doing in Utah. So they had a 15-week season that got condensed to 2 weeks. One of the reasons why they went that route is NBC, our media and broadcast partner, lost the Olympics. So we had an incredible opportunity to take what is an emerging sport globally, but certainly, especially in the U.S., and shine a light on it during this time. So they'll have a 2-week tournament. They'll be broadcast on NBC, the big NBC network, and across their portfolio. And really, we're ahead of the game in terms of this quarantined, one location type tournament. So that's one example that comes to mind. The other example I would just mention is on the digital acquisition front, for a lot of our businesses that are looking for new customers and users. This period, we're seeing acquisition rates that we haven't seen in a very long time in terms of what it costs to acquire a customer. So creative ad campaigns, we're encouraging our well-capitalized companies to acquire customers right now. And as Michael and Al alluded to, emerge from this in a position of strength.
It couldn't be a better time to focus on product if you're selling into these channels. We have a socially enabled buy flow solution called FIBA, in which we're investing. They work with hundreds of U.S. sport teams and had been accelerating their business quite nicely going into COVID. Now it's an opportunity for them to iterate on the product and continue to work on those sales channels such that when we come out of the social portion of the buy flow, where you can share your recommendations with friends, where you can get together as a group and have, where you can make that easier for people to come in the statement. That's going to be a more important piece of the commerce solution than ever. If they're working on the product, working on the system, you have a bigger portion of that opportunity out of it. We have an audio technology company that had predominantly been deployed in music. So obviously, as with all hands down, it's anyone who's operating in the live events difficulty. But for an early stage company that was taking its audio solution in the sport realm, they've been able to take a look at what's really needed right now from a solution perspective, from a product. So they are now having deployments in or driving content engagements at stadiums. They're taking their solution and they're using it both at sports stadiums. So they're starting proof of concept with the product to better enable their sales channel, not only during the time, but
these guys hit it well on the investment side. I'll touch on it as an operator a bit in my 49ers world. I think there's no better time to everyone's trying to figure out what the hole looks like in 2020 and how to climb out of it. That's the obvious. And so innovation comes in a number of different ways from a monetization perspective. You've seen in the MLS example or announcement the other day, some virtual LED that I think ESPN and Univision is going to allow the teams to participate in. You've seen the MLB start to look at additional entitlements that they probably haven't done before. You've seen, the NFL look to open up content streams that maybe always got piled into the national broadcast levels. And so how you slice and dice the pie is going to be really, really important. And so there's no doubt that's probably where my focus is as an operator. And then, we can't forget about the operations side of our business, the cost side, fan experience side. There's, we don't know what this will look like. And so, there's, of course, like the easy one is sanitation. The more difficult answer is, are we talking about thermal screening, scanning technology and contact tracing across our fan bases in the future, right? If you think about after 9/11, no one would have thought about walking into a stadium through a magnetometer. And so how we evolve from an operations perspective, I don't want to go too far because obviously my hope is people much smarter than me on the medical side will find a vaccine and a cure. So you don't want to sort of, go too far down that path, but there are going to be things that we learn from moving forward that I think are going to become norms in our stadia across the globe that really aren't norm today.
I would probably focus also a little bit on this new sector, if you want, that came out of this, or new, perhaps, into what could be this new sensor, performance tracking, health tech, let's say, that obviously has spiked post-coronavirus, and we've seen a lot of innovations coming our way following, in the last 3 months, let's say. What I would say also is that definitely, we as in the operating businesses that Aser has, for example, within 11, we always try to see what other things we can do. And for example, the watch together technology has been very successful in letting watch games basically together, almost being in the same room and connecting. And so there are always things that you can try and do. And from that perspective, actually, being forced at home, all these new technologies will obviously receive a further pull. So you got to obviously watch out the balance sheet, as we were saying before, but it's a great time to test some of these new technologies that are coming our way.
I'll stay on that for a moment and go over to the poll. So we had asked the audience during this season of uncertainty and lack of game day revenue, where should sports properties invest? The answers were new technology, health and safety, people, social impact, or don't invest and protect cash at all costs. Only 2% said don't invest, so 98% saying invest in something. And the overwhelming majority, a little over 2/3, said new technology. So let's stay on new technology for a moment. What are some things you're seeing right now that you're excited about as they grow in the sports industry? Michael, can I put you on the spot? That's a space you know well.
Oh, absolutely. Good that on an investment panel, only 2% of participants in the poll said that not investing was the order of the day. So I think we have the right audience here. But from a technology investment perspective, I'll say it again. It's any piece of technology that can better connect the brand. That brand is the team, the league, the confederation, athlete, increasingly. That technology that can connect that entity to the consumer. So if you look at, let's just take one big example in our world, which we all know well. Let's take media rights. Obviously, with no fans in stadiums, merchandising being impacted, and sort of from an in-person perspective being impacted. The media rights are really propagating the industry right now. So how can you inject technology into that world to better the experience, foster more engagement, foster more interactivity? And as you said at the beginning, looking at even just content, right? How is content being created? What type of content are people consuming? Now that we're 3 months into this, consumption habits have been formed. Consumption habits have changed. The type of content and the type of media people are consuming and how they're doing it, and the platforms on which they're doing are changing. So the technology that's going into that world, and again, the media rights world and sport is tens and hundreds of billions of dollars, right? So the technology that's modernizing that, that's helping create better product to connect that media rights holder, that team, that league to the fan, is ultimately going to be good from a long-term investment.
We're seeing the same from our seat as well. There's been a significant increase in sports teams hiring chief technology officers, and that's focusing on stadium infrastructure, but also digital investments and what types of products that they might purchase or build. And similarly, chief marketing officers whose roles are less about game day experience and more about how do we connect with our dozens to hundreds of millions of fans around the world, because many of our properties were so focused locally for a long time. And seeing the next place we need to go is, hey, we have fans in Australia, in Asia, in North America, in Europe, and how do we make sure that they're connected to the club at all times? And technology in all sorts of fashions are going to be what solves that.
There's no question about it. And when we think about our partners and who the LPs in our fund are, whether it's the York family and the San Francisco 49ers or City Football Group, owners of Manchester City and other clubs around the world, the fans that they have are not just local fans. They count into the hundreds of millions of fans globally. And the products that you can develop, and again, there's no better time to develop product than right now when the asset is not on the field, on the pitch, on the court. The product that you can develop right now, the investment that you can make right now to better connect your brand to the hundreds of millions of fans that are increasingly building up demand to consume your product, that's what's going to lead this industry into the future. And I fundamentally believe that coming out of this and into the future, we are going to have better products. We are going to be better serving, better engaging our fans and our community.
I totally agree with Michael. We just need to grow. We find the next big thing to do together.
I'm going to go to another question that's had a lot of popularity over in the fan community or customer communication platform over here. It's really cool what you guys have done with this platform. Francisco, so you've asked, let me pop it up on the screen. In this new environment, this new normality, what are the key levers a financial sponsor can activate within a club to create value? For example, from digital and new engagement opportunities to more traditional levers like pricing, sponsorship. Guido, I'm going to put you on the spot there because you represent a lot of properties in selling sponsorship and activating sponsorship. How would you reply to this?
I think the first one that they mentioned from the digital and new engagement opportunities are right, like spot on. I mean, everyone's looking to engage with content in an organic way, and when sports aren't being played, fans are thirsting for that content. They're thirsting for access to our players and what they're up to at these times. And so, from our sponsor perspective, Chad, I mean, your traditional rate card obviously would have some IP rights. It might have some signage and branding. Obviously, if you're in a world where signage and branding is maybe not as important because we're playing in stadia with no fans, then the digital footprint becomes so important. And how fans and brands can interact with those. So that's what we're seeing across our landscape. Again, it's not that brands aren't willing to spend money, because they are right now, but how they engage with a property and or what assets they take on are extremely important. And I'll go to a point Colin made on just sort of fan acquisition costs. At the same time, from an investment perspective, there's a number of different platforms we have at Elevate and that we're looking into from a sponsorship ROI perspective, because if you get outside of the traditional linear broadcast models, right, which are sort of easy to rate, and you get into a social and digital world, it does become a point where what value are you bringing to a brand, and how are you transparently telling them what that value is relative to data and metrics, impressions, et cetera. And so I think for my perspective, it's all within that digital content as we look to engage with our brands.
One trend I'll add from a purely U.S. perspective, we've spent a lot of time recently around the RSN business, which Michael knows well. And there is a looming shakeout on the horizon in that business model. And it's a significant source of revenue for a lot of the U.S. clubs in the NBA and Major League Baseball and NHL. And I think, figuring out what the next delivery mechanism for on a local basis. So we talked earlier about global, which is right about Man City and those big brands. But the local revenue stream for a lot of these clubs is a huge portion of their income statement. And, right now, I think there's a general feeling that it's going to be very tricky to replace those revenues as cord cutting accelerates. And the trend that was happening pre-coronavirus, I think, has unfortunately only accelerated. And subscribers are dropping off their cable packages at alarming rates right now. And that's been the best business model in media and sports for 15 years. And so the leagues figuring out how to replace those revenue streams with creative packages, creative OTT solutions, packaging rights in ways they haven't previously will be critical for the next 10 years.
We could do an entirely separate panel about that topic alone.
Exactly.
Definitely so. I guess the other thing we should probably not forget ultimately is that there's still an opportunity to just focus on what's inside these leagues and what other sort of services could be offered. We, for example, think a lot of focus potentially in the CRM space. There are a lot of businesses that are out in that space, and I think the opportunity in CRM for leagues more generally. That's why we will also focus on.
So taking investing another step. So there's the financial growth aspect, but there's also the concept of impact investing. A lot of these sports properties have a huge opportunity to build communities and enhance social impact. And I know some of your owners and your organizations are very passionate for that as well. And how do we invest in the good of sport as we go forward? Massimo, I'll put you on the spot first, because I know Andrea does a significant amount of this in underserved, under-resourced communities.
Yeah, absolutely. Look, I mean, at the end of the day, COVID has been some humanitarian crisis, I think, of our lifetimes, right? I mean, we all look at these, very, very, very horrible numbers every day, and it's, something that we definitely need to keep in mind. I mean, across our portfolio, we've been working to offer support wherever we can. So, for example, we use the network that we own to support and promote the WHO messages and making sure that people, comply with that as much as possible. And all of our portfolio companies has been that, Leeds, as you mentioned, they've done enough support to help vulnerable people in the recent months. So definitely we want to support however possible. I mean, ultimately, I think, no team can be successful without a strong community and a fan base behind it. And I think, ultimately, this one of the success factors, for example, we saw in our, 2-3 year ownership of Leeds has definitely been the ability to connection with the city and with the fan base. And I think that's definitely, one of the highlights that's in our ownership that I think is definitely a testament. You need to be very, very mindful of the need to promote good together with your investments. At the industry level, I think I would say that we need to continue to be positive in investment, showing support for startups that want to be innovative, and we're trying. I think everybody's panel is trying to do that within their organizations and support possible through various programs, accelerators to start with, for example, that may be out there. If not, the portfolio companies already in their portfolio. So we can and must absolutely do that, because ultimately it's a requirement of our world.
Chad, I mean, this is something we're very passionate about, and it's time to break the cycle of Colin mentioned as far as investing, as for the have-nots, or look. Global pandemic or the racial divide in our world right now, the people, unfortunately, with socioeconomic status, if you think about schools, right, those who had to go to work and their kids are in low income areas, and what they're facing on a daily basis. The San Francisco 49ers, like the York family, I couldn't give them more credit. I mean, we have a school inside of our facility. We have 8 full-time teachers. We do 60,000 kids K through 8, and we've been doing it for the last 7 years. And now it's time to double down on that. This pandemic, as we all know, millions and millions of people will lose their jobs. Kids will be impacted. And then if we don't do anything as sports teams or leagues or investors in these communities, the cycle will just continue. And so I think it's an unbelievably important time in our world and as teams to be leaders in this space. At the San Francisco 49ers, obviously 90% of our players are African-American. If you think about what's going on in the world, we need to change these things in our countries. And people look to folks like this on the panel. They look to teams that they love to represent what they want to see in the world. And that's not just dollars, that's actions. Statements are great. And I'm so happy, like every time I read a new statement, but it's imperative that these organizations use their capital, use their bandwidth, use their brand to socially impact and economically impact those who are most hurt during these times. And I think about, what we're all going through right now, Chad, and even your group. I'll give you should every sports team have an equity officer? There should be even more emphasis placed on diversity and inclusion than there already probably was or is. And so I look at that as an opportunity for all of us to learn and to identify what's really going on in the world and to take a stand and to act against it. And I think if we all do that right now, we'll come out a much better society.
That's a great answer, Al. Thank you. And we certainly are starting to see that organizations talking about heads of social impact or chief diversity officers and saying it can't just be a statement. We actually have to actually measure, did we make an impact? And how do we measure that? And let's be quite intentional. And Silicon Valley was making that move years ago, was starting to look at their sustainable and their environmental investments as causes as impact investments. So are we getting a return? And is the return the maximum return we could get for making a difference in the world or in the community we're serving, which I do think we'll see more sports organizations do. I'll go to the poll. We've got one final poll, and then we'll go to a question that's popular right now and trending. If you had to place a bet, I'm going to ask each of you this, so quick answers on it. If you had to place a bet, what's the next fastest growing sector in the sports industry in the next 5 years? Is it A, sports betting, B, esports, 3 or C, new digital platforms, or D, expansion of existing sports into new markets, such as the NFL into Europe or cricket into America, et cetera? So sports betting, esports, digital, expansion of the existing. Colin, you first.
Well, I'm biased. I'll say sports betting, but we're one of the largest shareholders of DraftKings, so you got to take that into consideration. My unbiased answer, just to try to diversify a little bit, I would say D. One of the trends that we've talked about a while at Raine is the professionalization, the globalization of sport, 10 years ago versus where the industry is now on a global basis. And we're working with leagues in Asia and Australia, and there's a ton of opportunity for those leagues to grow, take some of the best practices from more developed markets and apply them. There's huge opportunity, and as an investor, the entry price is more attractive. So that's how we think about the world.
Al, you're next.
Double down on that. Yes, I think it was already there, frankly. But as you look at some of these states and the holes in which we're in and the dollars, you're seeing it's unbelievable how fast-tracked those who don't have gambling in the U.S. from a state-by-state perspective to how quickly it's ramped up in the last 3 to 4 months. So with Colin, not just because he's had a good time and he's biased. I don't think he's biased. I think that's the right space.
Michael, over to you.
Is tripling down a betting term? Look, all are very positively indexed, not only to what's happening, but what the future trend is going to be. But have you seen DraftKings price? Have you seen all the articles about the fact that people who are waiting around to bet more on sports and bet more in states that are now accelerating their move to get betting legalized, that these people are actually propagating the stock market because of their day trading. The movement in the sports betting area, even given some of the measures that are holding it back in this country, all of those trend lines show that will absolutely be the breakout amongst these.
So I'll use one of the few betting terms I know. Can we go for a superfecta, Massimo? Do you have the same answer? Or would you
I would actually spread my bets. I think, obviously I understand exactly, I think there's a, you can see the different location, I guess, we're based in. I mean, obviously, sports betting, I can understand in the US with all the changes going on there, it's going to be massive. I think probably in absolute term, I definitely agree with it. I guess, the other area I would highlight, perhaps because I think it's starting still from a lower base, is esports. Ultimately, there is a lot of consumption there, but still not as much revenues as you have seen. And sometimes when I look at, when I started my career, there was this pie chart that showed how much time people spend reading newspapers and how much money spent on newspapers. And the fact ultimately, there was a lot more time spent into the money spent in digital. And I think, in a sense, we're going to see that in esports, where a lot of time is spent on esports. I think people need to understand whether those are profitable audiences. But generally, at least in terms of in terms of, there is also a big opportunity there, I would think. Although perhaps in absolute terms, not as big as sports betting.
I'll give you the answers as they came in. And mind you, we have a very global audience today. So I see the 3 Americans all said sports betting because it's not as prevalent in America, while in other markets, as Massimo rightly points out, it's already of significant scale elsewhere. Esports and new digital platforms tied for first. Expansion of existing sports into new markets gets the 3rd place spot. And sports betting was actually the lowest, but they were all quite popular. One final question, because it's one that's popped up and has received a lot of popularity in here. I'll bring it on the screen. Luis Vicente, do you believe there will be more fit-to-purpose models for investors in sports after COVID? And what is your point of view over recent rumors of CVC, TPG, and KKR discussions for commercial joint ventures with some of the European top soccer leagues?
It's an active trend. I can tell you the number of inbounds from traditional institutional investors that have CVC has spent a lot of time in sport over the years, and we have a lot of respect for them. It's getting more competitive. People that in groups that have had no interest historically in sports are doubling down. We did a deal last December with Manchester City and Silver Lake. You're starting to see a lot of big funds see the opportunity in the space. And I think the environment right now will only increase that interest. As leagues and teams look for liquidity, they look for more ways to monetize and get the capital they need to grow.
Yeah, I mean,
agree. That question was an inside job. Massimo, you take it.
Exactly, as Secondo, we what Carl was saying, because ultimately, it's absolutely on the spot. There is, I'd say, I'd say to Luis, now more than ever, this is required. There is a perfect time, Colin is like, why? And I think, there are many investors out there that could see this as an opportunity. However, I would say, there needs to be the requirement for some good capabilities in the space. So, I think that definitely will be some that will result more successful than others.
Michael, you were starting to answer, so why don't you take it before we wrap up?
No, I yield my time. Those 2 answered it as well as I ever could.
Very good. Well, thank you all so much for sharing, for your participation. Really great spending time with all of you. And David, I'll hand the microphone back to you.
Thank you so much, Chad. Just looking at those polls, I mean, it's such a fascinating discussion. It's been mirrored by how our audience have responded in those polls. Just have a look at the spread of the votes, particularly on that last one, but also the first one. And okay, there might have been a landslide victory for New Tech in that second poll, but perhaps the more telling point, as you mentioned, Chad, is that yes, people should continue to invest, and it's great that that's the view of the audience and that sport will recover and invest in what? Well, we had so many suggestions. It's great that women's sport is being backed. Some really strong thoughts from Al there saying that investors should be invested in women's sport from an operations perspective as well, not just putting up the dollars, but growing those teams and leagues, and hearing a bit from Michael on Athletes Unlimited and the focus on women's athletics over there. Obviously, we're going to have a lot of focus on tech and innovation, and Michael saying the best tech is simply the tech that connects the brand to the consumer or fan in the best possible way. Absolutely chime with all of that. The digital and new engagement opportunities that Al talked about, and those innovations like the quarantine tournament that Colin mentioned as well, one of the innovations that we've seen whilst we've been in lockdown, but how I suppose innovation and how things are changing is reflected in the makeup of different organizations, having chief technology officers, chief marketing officers that Chad mentioned as well, trying to maximize that connection, that engagement with the fan. That remains the key lesson really to take away from all of this. And then moving into social impact and how sport is such a wonderful vehicle to affect positive social change. Should we have an equity officer in every organization? It's a really good question, Al. I do think it's something that we should consider, and really making sure we represent diversity and inclusion. And then, of course, we went onto that final poll and just trying to work out what the next fastest growing sector in the sports industry will be. If you saw my notes, they're an absolute mess. But what that means is it's been an absolutely fascinating discussion. Thank you so much to Michael, Massimo, Al, Colin, and Chad, particularly for guiding the discussion so expertly. Thank you to all of you for being here as well. And also, we know that we've had a few challenges with the tech, with the broadband and, of course, the audio. But remember, we are joining you from all over the world, and particularly thanks to those stateside for getting up early to be part of our discussion. Next Thursday, by the way, everyone, we're looking at sports sponsorship and exploring some of the innovative ways that brands and rights owners are adjusting to this new kind of virtually dominated landscape, would be the way that I'd put it. I will be rejoined by another group of industry experts. We hope it will be another fascinating discussion. So make sure you stay close to 11 Sports and World Football Summit's social channels. We look forward to seeing you next Thursday. But in the meantime, enjoy the rest of your week and weekend. Goodbye.
Thank you.